So the big question is, how do you apply for a startup business loan or credit? EIN only, no personal guarantee, especially if you want a fat amount, a large amount. It's very important to understand that when we talk about startup business loan or credit, EIN only, no personal guarantee, you need to have a constellation of documents ready. Okay, very important to think about that. So your personal and business tax returns are quintessential. You might be thinking, well, I have a startup, so I have not filed my tax return yet. Well, it depends on how old your startup is. Let's say if your startup is 6 months old and you actually opened it last year, like 6 months, like if you open it in June, that means that you probably have filed your tax return for the first year, right? So it's really important. The lender wants to see that. The lender wants to have a comprehensive overview about your finances. It doesn't matter if you generated revenue or not. It doesn't matter. The lender just wants to see the cash inflows and cash outflows about your startup. So personal and business tax return is really important. Those are important. So your 1040, your 1065, 1120S, 1120C, 1120 are important. You also need to have financial statements from your business checking accounts. So basically, you need to have, if you have a startup and you are looking for a business loan or credit, boss, you need to have a business checking account. And so the lender will pay attention to your financial statements, but also your account statements from your business checking accounts. You need to show also the lender business registration documents. So based on the states where you currently are at, let's say you are in Texas, right? So you need to show the lender financial, business registration documents from the State Department of Texas State Departments. So you need to show something like articles of incorporation. In this case, we're talking about, if you were speaking about an LLC, we have or a partnership for that matter, you have to show articles of organization. If you're a corporation, you have to show articles of incorporation, okay? And also think about your estimated annual revenue. So here we're talking about projections. So you need to show that. So if you want to apply for a business loan, a business line of credit for your startup with EIN only, that's important. And don't forget to add to the whole list a business plan. We want a business plan that is well written, that is comprehensive, that talks about your startup in and out. Let's just clarify what lenders are looking for. By the way, boss, welcome back to the show. It's really a pleasure to have you here. And in today's conversation, I'm just explaining to you how to get a startup business line of credit, EIN only, no revenue. So what are really lenders looking for? I mean, you might be thinking, probably you applied in the past and your ass got denied. So you were just thinking, you're just like, wait a minute, what's really happening here? Why am I being denied over and over and over? The thing is, you need to have a clear idea of what lenders are looking for when they're reviewing a startup business line of credit application, loan application, or line of credit application. Especially if you want to go the EIN only route, things are a little stricter. You need to apply specific formula. So lenders are looking for a steady cash flow. Steady cash flow means what? You are having a consistent and constant flow of cash. So liquidity in terms of inflow and outflow. So if you have a startup, you have no actual cash information, right? You need to have projected cash information. So we're speaking about having a projected cash flow statements that shows your cash inflows and your cash outflows. Lenders want to see they want to see a business model that is consistently going to make money. So if you have a startup, you have to understand the lender is thinking, hey, listen, this company has no established operational history. There is no proven track records. How can we trust them? I mean, they're asking for $250,000. They're asking for half a million. Okay, but you have no past. So this is why you need to actually show the lender that your business model is solid. Okay, and everything goes back to what I told you earlier about the business plan. So when we talk about business plan, part of it is to explain, to articulate to a lender or equity investor for that matter, that your business model is strong. You need to have at the personal level, you gotta have good credit history. Now, the lender is not going to take your personal credit score, your social security number into account, but it just goes to talk about the due diligence the lender has to do, and they pay attention to people who are behind the business, their financial history and whatnot. And also think about making sure that you can explain to the lender that your business will be one that will have longevity. In other words, your startup is not just here and will actually die within 1 year or 2 years. And so you need establishing business longevity can be a little tricky because nobody can predict the future. But a good way to really to actually show the lender that you will be here for the long haul is to show like multi-year contracts, or you're doing something that the community needs, that your customer needs. You are like, the value chain that you have is superb. You are providing value that people cannot do without. Let me talk to you about how to qualify for a startup business line of credit with no personal guarantee. How do you actually do that? By the way, I want to quickly remind you of today's topic. We're having a quick convo about startup business line of credit, no revenue, fat amount. For us, it's really important to have EIN only, no revenue, and a fat amount, large amount, massive amount. So how do you actually qualify? You need to understand. So if you are an entrepreneur, if you're a small business owner, and you have found, let's say, a startup, you need to actually think about three things. So you want to think about, first of all, what I just told you about your the regulatory compliance. So going back to the hypothetical example I took about taxes, you want to make sure that you are legit. Your business, your startup is legit. You have filed all the paperwork. You have done your articles of incorporation or organization. You have your licenses, your business licenses and permits. You have opened your business bank account. You have your EIN. You have your certificate of good standing. You have your registered agent service. Those kind of things will help you buttress your regulatory compliance sort of process. So that's the first thing that lenders wants to see. If you want to qualify for a startup business line of credit, EIN only, no personal guarantee, make sure that you are legit. That's number one. Number two, you need to actually talk about the fact that the business model is superb. It is solid. It will make money, that you will make money. And you usually do this through business plan and financial statements, a business plan and projected financial statements. So the third element here is to actually explain to the lender that the line of credit you're applying for will give you the cash you need to expand the business. Because see, the lender is not interested in you just getting the cash and using the cash for whatever reason you want to use the cash for. If you're able to articulate to the lender, hey, listen, I need this cash, and this is why I need the cash. I'm gonna use this cash to actually maybe buy equipment from time to time, hire new staff, expand, buy inventory, and so on and so forth. So you are able to explain to the lender the reasons why you need the money and why those reasons will help you make even more money in the future. So the big question is there other financing available for startups? Because we're talking about business line of credit. Okay, this is cool, especially if you're looking for a fat amount. This is cool if you're looking for if you're looking for a line of credit with no revenue requirements, EIN only. This is kind of cool, but you do have a smorgasbord of funding options when it comes to startups. Okay, especially on an EIN only basis. So you have small business loans. You have business credit cards. You have merchant cash advances. You have invoice factoring arrangements. You have equipment financing arrangements. You have commercial real estate loans. You have bridge loans. You have SBA loans. You have business grants. And you have crowdfunding arrangements. So the whole thing here is that you have to really, really clear about what really works for you. And if your business has been operational for less than 6 months, you can still qualify. But so it's all about you actually sitting down and looking at the collection, the smorgasbord of startup loan options, and asking yourself, which one will I fit for? What do I really need? Okay, what do I need? And based on what you need, you can actually choose a specific type of business line of credit or business loan for your startup that really fits what the startup is trying to do. This is important. So you want to get if you want to boost your chances of approval, you need to actually choose a startup business line of credit or a startup business loan for that matter that fits your specific operational needs. So that's the first thing. So after choosing that specific financing product, you want to actually direct your attention towards the lender who can best match your startup. So the answer to the question is yes. There is other financing available for startups. The question is, which one do you qualify for, and which one does really fit into your own business model? So once you actually have answered those two questions, then you need to contact the lender, start the conversation so you are clear about the list of restrictions they have, if any, because sometimes some lenders just put a little bit of information on the website, and then when you call them, when you start having conversations with them, they give you a long list of criteria, even though on the website they only had a short list of criteria. So it is what it is. I really want to talk to you about revolving versus non-revolving lines of credit for your startup. By the way, I want to quickly remind you of today's topic. We're still having a conversation about a startup business line of credit, EIN only, no revenue, fat amount. How do you get it? How do you actually get that? Okay, so which one is really right for you? Revolving or non-revolving? This is important for you to have a clear idea about, because if you have a startup, you have already a lot of stuff that you are running on the side, and you don't want to waste time on a few technicalities. So revolving credit allows you, a revolving line of credit allows you to borrow funds from a bank, credit union, or a lender up to the set credit limits you are given during approval. And so this differs from a term loan in which you borrow a lump sum loan amount and make equal sized payments until it's repaid, right? With a revolving line of credit, interest only accrues on the amount that's been used. Therefore, you will not be required to pay interest when you're not using the credit line, which makes it more affordable than a non-revolving line of credit. And the thing is, while some lenders charge a maintenance fee to keep the account open, there is typically no cost if you don't use the line. So this is really good, okay? And another line of credit option is non-revolving lines of credit, which is a lump sum product. So once you pay off the amount, your account will be closed. Therefore, if you want a line of credit for ongoing expenses, this might not be the best funding options for your business, your established business, or your startup in general. Okay, and ultimately, your new business could benefit from either line of credit option. And if you are unsure of how much financing you need, or if you will need financing in the long run, it might be better to take out a non-revolving line to start. Okay, so this is important, and that way you can close the account once your debts are repaid. But going back to our general conversation about this whole line of credit thing, it's just better to first start with what you want out of why you need the cash. Because once you have a clear idea about why you need the cash, and you also have a better idea about how to actually get the amount that you need, you're in a better position. You can be approved like ASAP, and it's totally possible. So let's talk about what lines of credit offer to startup who are looking for EIN only, no revenue, and fat amounts and fat approvals. Okay, and when we talk about, let's go back to a credit union. Let's go back to, let's say, line of credit, business line of credit for your startup. Let's go to the 101, to the origins, to the basics. So a business line of credit can provide you anywhere from 10 grand to over $1 million in credit that you can access whenever your startup requires funds. Okay. And the interest rates associated with the business line of credit are usually between 1% to 3%. Now, having said that, keep in mind that these rates only apply to the amount of balance that you have yet to repay once you use some of the credit. So the majority of lenders will allow you to withdraw funds from your line of credit without needing to pay a high fee. Okay, that's important. Now, on the other hand, a small fee is usually necessary when you open a line of credit. This is why we tell our viewers, if you're interested in avoiding a business line of credit, then open such a line of credit at your local credit union, because large banks such as Chase or Wells Fargo or Citibank or, you know, yeah, what have you, and even the regional ones, the regional banks. You're talking about the PNC of the world, the Truist Bank of the world. You're speaking about the BMO Harris of the world. Those are also they also have their own fees. They have their own fees, okay? And so choosing the best startup business line of credit really depends on the relationship you have with the institution. But one thing I can say is that you have a great banks, you have a national behemoths in the financial space that offer big and wonderful business credit card options for your LLCs. So you have, for example, Bank of America, that you have a great, great system, and Bank of America offers unsecured and secured lines of credit with low interest rates and the ability to obtain a line of credit of up to $100,000. This is fantastic. You have PNC Bank, which has an analogous service, so they actually offer secure lines of credit that can last seven years with limit ranges from $10,000 to $100,000, and they also have unsecured lines of credit. And you have Wells Fargo, which provides 2 unsecured lines of credit that allow startups to request as much as $50,000 with low annual fees and a fantastic rewards program. So this is really fantastic. So overall, great offers here. And before I close to this conversation, let me ask you a question. What do banks need to grant startup business lines of credit using EIN only, no revenue, and fat amount? In other words, what are the requirements to get such a line of credit? One thing you need to understand here is that whether you're a startup or established business, you need to make sure that you are explaining to the lender that you have good cash flows. If you are a startup, you need to explain where you're getting the cash flow from now and how long would that last without revenue, right? Because you must be getting the money from somewhere. And the lender is interested in that. The bank, the credit union wants to, or the online lender, they want to really understand what's really happening here. So if you say I have no revenue, but I'm generating money, where is the money coming from? So cash flow is really important. You also need to have a high credit score. When we talk about high credit score and EIN only, there is no contradiction. There is no dichotomy here. No, because your personal credit score will not be factored into the overall decision, the final decision for your startup. But the lender wants to make sure that the person they're speaking to, they just want to have a clear background of you. At least they have a clear idea. So, for example, if you have an open bankruptcy, and even if you are trying to apply for an EIN only business loan or business line of credit, they're not going to approve you at all because your risk is high. Okay, and also think about whether or not you have some kind of collateral to offer, so that you can actually get the lower loan, a lower amount, not a lower amount, a higher amount but the lower APR. So your startup may have pieces of some collateral, including cash, some of your inventory, property, land, unpaid invoices. So those are really important elements when it comes to making sure that you get the loan that you need and the amount that you need. And if you want to actually boost your chances of obtaining a business line of credit overall, like on a consistent basis, make sure that you maintain a specific liquidity, make sure that you maintain a specific net worth, and make sure that you repay the entire line of credit periodically, which could be once per year. So it's very important. We go back to not exceeding a certain amount of debt. We go back to your CUR. We go back to your DTI, making sure that you have the right amount, the right mentality, the right mindset to actually avoid any kind of problem in the long run. Very important. Thank you so much for your attention. I really appreciated it. In today's conversation, we were talking about startup business line of credit, EIN only, no revenue, and fat amounts. How do you get it? I went you through a series of questions and answers to actually show you what to do. I will see you another time, but until then, remember, stay marvelous.